everyone, this is the Trader Investor, and I just want to do a follow-up on the four ETFs. In this morning's video, especially in the SPY, I mentioned that I was expecting this gap to close, and that's pretty much what the markets did today, even though they didn't give us a clean way to go there. Thursday last week, beautiful move, but today it was not a clean move. However, as I draw imbalances, meaning big gaps left behind, I expect at least half of imbalances to be closed, and this is what happened today in SPY. We started off kind of strong, but then we had some inside bars, and just some very small movement, and then it started to collapse and never recovered from that collapse. And by the end of the day, we closed at the halfway point. Now, another thing to note, why did price reverse where it did? You saw it reversed right here. So what I like to look at is look to the left. What has happened to the left that could signal this is where it ended? And actually, this is exactly where I took my profit. I've entered it. I was, as I do my work, I monitor my charts, and then I'm able to see some potential areas where price could stall. One is the high of the 15-minute range of Friday, the mid or the low, and we ended at the mid. So as price started to push down, it didn't really push back up at the high, it just kept going down, but once we got to the mid range, it started to reverse. So this is a good way to look at and locking in your profits when you're doing intraday trades, right? For swing trades, it's a different story. But this was my expectation. My expectation, as I said this morning, was to fill in this gap, and this is what we did in the SPY. In the Qs, we had already closed that gap, so I really did not have any interest to go on either side in the Q, so I was not monitoring this chart at all. If I did, I might have gone short here, but that was not part of my strategy, because once I am in a solid position that is going up and down and not in a clean way, I want to monitor that trade, and I also don't want to add on additional risks because the market is very indecisive today. I mean, it really started to be decisive towards the end of the day. IWM opened and had this range very close to Friday's range. The high of the range and Friday's high of the range were very close together. So I did not have a lot of interest on the downside, because what happens is when we break the downside, then the next area of trouble, right, our first sign of trouble, comes at the 15-minute range of Friday, which was not a lot of distance away from today's range, 226.46 to about 225.55. I mean, it's about $1 move, but $1 move for me does not show strength. I want a big gap so I can take advantage of that $1 move. Otherwise, if it moves halfway and reverses, then I don't have a lot of wiggle room to get out of profit or cut my losses very quickly. So that's why I'm not interested in a tight potential target one. I want target one to be a little bit further out. Diamonds were strong. They kept going high strong, but when SPY, this is how I was looking at it. When SPY was having this up down bars contained within each other, and the 6:45 a.m. Pacific time bar contained the next three bars. The next three bars did not break the high or the low of that bar. So for me, when I started to see this in the diamonds, I was not in a hurry to start to go long. That's what was how I was looking at it. So overall, we did close this gap. We shall see tomorrow morning where the markets want to take us. This is how I'm analyzing each chart day by day, as you want to do this short-term quick in and out. So what we're seeing is last week, for the exception of Thursday, it's been very tight range. It's kind of playing out similarly today. I mean, it's a little bit wider range, but nothing like we see on Thursday, last week Friday, last week Thursday, last week Wednesday, last week Tuesday, last week Monday. We've had some very good moves every day, not last week, the previous week. Every day we had some very good moves. Last week it was only one day where we had some good moves, and today is playing out to be kind of a slow day. So let's just be nimble and look at that as we prepare for our trade tomorrow. I would like this 15-minute range to be significantly outside of what it is today, right? Somewhere up here or somewhere down here. And even this down here, because of this range here, my real preference is this one here. That way I have room to cover any gaps, right? I have room to close gaps in whichever direction it wants to play. I have room for big targets down here. Up here I don't have any target because it's all-time highs, so it's just going to keep driving until we see a candle formation that says it's a reversal is coming. So this is how I'm looking at the markets. This is what they're setting up to be. So in the morning I will do a quick video right around market open, 6:30 a.m. Pacific time, to prepare us for that day. All right, everyone, take care, and don't forget to like this video. As always, you have a great rest of your evening, day, whichever time you're watching this video. Bye for now.